Okay, folks, go ahead and kind of get started here. First of all, thank you for coming on board, spending a little time with us today. And today we're going to kind of be going over, call this one outlining all of your extended care plan options. And this was just kind of a brainchild of a couple marketers around here. GoldenCare does a lot of product training, product specific stuff. We talk about short-term care by itself or long-term care or the hybrids, the life and long-term care life insurance hybrids. So we have all these products, but we just want them to kind of take a more of a basic look at saying, let's just take a look at all the different plans that GoldenCare does have and just a little brief thing about them, kind of when they come up and when to use them. And this market, I guess, is ever evolving, and there's so many type of products that are coming, between the home health care and short-term care and the home care only ones or the life or annuity hybrid plans. There's whole life burials that have, living care riders now, service care contracts. What we try to tell our folks is, look, no matter what you're working on, no matter what state the client might live in, no matter what health ailments they might have, no matter what their age or budget is, there's likely a plan that can help them out. But there are a lot of them out there. So what I wanted to do today is just kind of try to take all of these plans and try to kind of put them in focus a little bit so you at least know what's available. I don't expect you to take any type of, copious notes today. You will get a copy of this presentation after it's over. So don't really worry about, writing down much stuff here. This is just going to be a very general overview, if you will, of the different products we have and just kind of a take on why these products are becoming more and more important. So that was kind of the brainchild behind this thing. So my name is Jeff Clark. I've been around, I guess I've been here for 28 years. I do a lot with the long-term care, have for years. I've written about 700 policies in the long-term care market. I continue to do some of that. I still some short-term and some home health care, and I've mainly shifted into more managing, recruiting, comparing, contrasting, reviewing different products, working with carriers to design products that can help our agents out more. So my role has certainly shifted as a regional director to more of a managerial, but I still roll my sleeves up and I still write policies. I got clients all over the country that have brothers, sisters, aunts, uncles that I try to help out. So I think once you're in this business, it's easy to say that you get I get lots of referral business from folks. So it's nice to kind of keep in other words, I like to scratch a few apps. It kind of keeps me aware of what's going on the boots on the ground type thing. So I kind of feel like I can relate more with my writing agents out there. Here can do. We do believe that this market is shifting. It was so long-term care centric, but like I've said, things are changing. People are looking for more care in that home. They don't want to go to a nursing home. The long-term care policies, again, have gotten expensive, hard to get. So we're really starting to see a big shift here. Agents are really now focusing more on the short-term care plans, and really the short-term is a bad name for them. We'd like to call them extended care because they carry in some situations every bit as much benefit as a lot of the long-term care plans that are being sold. So I hope as I go through this, we'll kind of understand the method or madness. But the biggest thing I want to take away is that this market's changing. And I think as agents, if we start talking about these things being extended care, in such a wide variety of things when we say that. So I start all my webinars lately, since COVID, this aging with dignity, staying at home, people are terrified of nursing homes. They just are. 61% of people said they'd rather die than go to a facility. This top stat's kind of interesting. I think a lot of us follow this conception that we have healthcare and eventually we're going to have Medicare. And well, the reality is that 70% of Americans over age 65, 90% of married couples are going to require some type of home care that's not going to be covered. Medicare, I tell a lot of my clients, agents, as I'm training them on this, it's hard to go into the exact Medicare rules, regulations. They're constantly changing. But one thing I know that's consistent, Medicare is going broke. We all know the aging of society, baby boomers are moving in, we're getting really top heavy in our society. When Medicare started, there was 11 workers for every one employee or one person who was on Medicare. There was 11 people working, paying into that system for every one recipient. Well, now we're down to 2 workers for every one recipient. And those recipients use 2 to 3 times the dollars they used to use. And so as we age, it's not hard to tell people that we're getting older and Medicare is going broke. So when I tell people, whatever Medicare is covering now, it's not much. But what do you suspect it'll look like 20 years from now? I'm telling you, they're not going to be covering more. If anything, the reverse is true. They've been backing away on benefits, at least in my 27 years, 28 years. It seems like Medicare has cut back more and more and more, and that's going to continue. So the biggest thing is that these are very uncovered needs that people have. And the 90% of adults have never really had a real discussion about this. Like there's a Gallup poll recently I read that, there's 90% of people are wanting someone to talk to them about this. They just, there's a lack of really, for lack of trained extended care agents out there. There's just not a ton of people that are well versed in these products to answer these questions. But I promise you, if you do bring it up to your clients, it will be well received. They are actually those 60-year-olds, even latter 50s, 60-year-olds, 70-year-olds. They're understanding because they're taking care of their parents. They're seeing it happen all around them. They really wouldn't mind the conversation. So don't be afraid to bring it up. If you need some help with pre-approach letters or some emails or social media drip campaigns, we got a lot of that type of marketing stuff we can help you with. So we want to encourage you to bring it up. We'll be in your corner to help you. We'll make you look real good. We'll get you proposals. We'll, depending on the health and age of the person, where they live, we'll get you the products, the right ones. We'll get you the illustrations, the apps, the training, whatever you need. So don't be afraid to offer it. Okay. Oh, there's some animation there. Okay, another stat that's really important, because I'm going to come back to this, but in this country, 2/3 of all bankrupts are a direct result of medical bills. And boy, I understand. I mean, no matter what you have done, even when you're insured these days, whether it's a surgery or something, or you spend a couple of days in the hospital, our copays are easily over 1,000, 2,000, 3,000. If you have a husband and wife, maybe a child, 3 of them in the hospital the same year, it's so 78% of people that are filing these bankruptcies because of medical, 78% of them had health insurance. So, there's just a lot of stuff that does not get covered when we talk about care. And this is why, again, we'd like to say extended care, because there's so much in that short term that can be very, very expensive. Ideally, you want to cover them from the second they leave that hospital. Long-term care, we used to call it, that was after 90-day period, and they needed care for 3 months or longer, we'd pick up, at the end of the longer time claims. In reality, there's a whole lot that happens that first 90 days that's not covered, and it becomes very, very hard on these folks. So, all right. So as an agent, how do we know what's out there? There's there's a lot of products, and so it's tough to kind of decide what's right for the certain situation that I have. Again, factoring what their budget is, what their age is, what their health concerns, what state they live in. Are they moving? Are they retiring and maybe moving out of that state later? So just know at GoldenCare here, we've got the premier home care services, service plans, standalone home health care plans, comprehensive short-term care insurance plan, and traditional long-term care insurance plans. The linked benefits, when they're doing the universal life that has the accelerated benefits there for chronic need or a terminal illness, and the true ones that are linked, that you can use your death benefit in the form of a nursing home or assisted living or a home health care claim. So those can be in the annuity version or the life insurance version. So we say hybrid, it kind of covers a lot of area. Then also you're seeing the newer ones, we have whole life, we have burials that you can use some of that money then towards, they call it a living benefit option, where you can get X amount of your monthly benefit out of your death benefit. You can take $4,000 a month or something for a period of time if you become terminally ill or have a chronic illness or things like that. So there's just a lot of options. And then we've been teaching people too that sometimes, even with the linked hybrids, sometimes people as they get older, they don't necessarily need a bunch of life insurance, but they do need the long-term care or short-term care or an extended care plan of some kind. And so we've been kind of teaching people that sometimes instead of an expensive hybrid, you might want to just sell them a short-term care plan or a standalone long-term, and then just add a small life insurance policy with it. By splitting these plans up, it's oftentimes a lot less expensive for the client to separate them instead of going to a linked product. So again, all these options, we just want to let you guys know, I guess, that we have a lot of different plans, a lot of different ways to handle this extended care. And so it's hard, I guess, for an agent to understand what's out there, but hopefully we can do a little bit. And why so many? If you look at the old school ways, the long-term care and the traditional hybrids that were around forever, it was getting to the point where it was just really, really hard to get people insured. Now, this stat here is telling you that, 47.2% of people between age 70 and 74 were declined for long-term care. I can tell you that placement's a lot higher. I don't know why the stats don't bear up, but typically if you look at 70, 75-year-olds, 70% of them don't get policies. They either don't keep it, we don't place them, they're too expensive. Maybe they got rated up after they did get declined to a higher class and suddenly it's 7,000 instead of 5,000. For whatever reason, the placement rate of people 70 and over is terrible. It's a quarter percent, maybe 25%. And so another reason why people got out of the market is it just got very expensive and it got nearly impossible to get people issued. Well, then we do, when we talk about these extended care plans, so now we just have a lot more options in the short-term care arena, the home health care arena, the home health care service plans. And so we're able to help a lot more people. I can tell you that the need for long-term care and extended care services hasn't gone anywhere. Matter of fact, like I mentioned earlier, we're aging as a society. We're running out of places to put these folks. We're running out of able-bodied people to take care of them. And so certainly the onus is shifting onto folks to take care of their own care. Families, it's kind of like you're on your own. So the need to kind of plan for some type of extended care need is becoming more and more paramount. And now we can actually help a lot of people because we've got a lot more plans, a lot more arrows in our quiver, a lot more products at our disposal to help them. And so how do you know when the right time to use, home care or a short-term care or a long-term care? Well, that's something that GoldenCare, we want to help guide you a little bit. But one of the things we do, and I just brought this up, I want to share with you, health-wise, now obviously the easy ones are if they're over age 70, they are 74, they can't get long-term care, or if they're under age 45, they can't get short-term care. So some very basic things there. And then of course, what state you're in, they might be approved. So those are the obvious ones. But we have a tool that you're able to use with us. We'll coach you how to use it. But let's just say I have, for example, any ailment out there, we have all the underwriting guides for all the products out there. So depending on what you put in here, it'll tell you the products that will accept that ailment or that health condition and which ones will not. So for example, if I wanted to do, I don't know, the use of a one-prong cane, okay, I'll do that. And when you notice here, it's going to tell me then that, oh wait, stay on there. Okay, so now I can tell you that, yep, home care is good. Their home care only plans are good. The short-term care plan with Manhattan Life is good. Wellaby's short-term care plan is good. Aetna's short-term care plan work out. Just found out that GTL's short-term actually won't take the cane, but that's still pending. Cigna, it's good. So what a completely very, very handy tool to use. If you get in that spot where you're not sure, quick little tool for you to use. Where you can get some help. So this is where we start needing these plans. Let me go back out of that. And you can find this, by the way, on goldencareagent.com. Let me go back to my PowerPoint here. Okay. So in other words, the reason we have all these plans, we can help more people. Call GoldenCare, use our instant pivot, depending on their health, their budget, what's going on with them. You'd be surprised how many people we can actually help. So with that, let me just kind of again talk about some of the things that are available. First of all, let's just say someone is completely not healthy. They're not going to qualify for anything. Well, True Freedom is a thing. It's kind of a prepaid home care plan where you're basically prepaying for your home care. There are no health questions. Basically, if you're not currently in a nursing home or receiving care at home, that's it. Okay. You can get some type of a home care package here. We used to say if you can fog a mirror, you can get this one. Okay. All right. Now, if they're not that sick, they're somewhat independent. You've got standalone home health care plans. Manhattan's got a great one. GTL does too. So does Aetna. They're all very good home health care plans. I know we're kind of currently tweaking some of these are being tweaked a little bit. And they're going to become stronger and stronger. In my opinion on this thing, these home care only and short-term care plans, there's more of these coming as the long-term care companies are kind of disappearing. The short-term and home health care plans are really starting to kind of grow. So we're going to see a lot more options here. And that's just good news. We want to be able to help as many people as we can. So in the home care only area, you've got these products here. You've got Manhattan Life's Home Care Select, short-term care, home health care with GTL. You've got GTL's got actually two of them. They've got it's called Home Care Secure, and the other one's called the Home Health Care Plan, short-term home health care. And then you've got another one here with Aetna's Home Care Plus. I won't go into the details of all of them, but just suffice to say that they basically pay for either 150 a day, 300 a day, or 450 a day of care in the home for a 1 year period. So again, for a lot of folks that can't afford nothing else, their health isn't that great. Maybe they have it's a little tough, but maybe they've already got, I don't know, they've had cancer a couple times. They use a cane or something, or the home care plans are still available for these folks, and they can offer a lot of help. They also have prescription drug reimbursements built into them. So a lot of times for a 65, 75-year-old, a home health care plan that can provide them with several $100s per day of coverage if they need it, if a nurse comes to their house, they can get these plans for 40, 50 bucks a month. And more often than not, the prescription drug reimbursements inside of there will give them up to $600 or more back annually. So we coach our agents. For a lot of folks, these home health care plans offer a lot of benefit, and they cost next to nothing or almost nothing for most folks. Anyone like under age 70, these are basically free little plans. Premiums about $400 or $500 for an agent. It's a great way to help your client out. They'll get it issued. You'll make a little money. It doesn't cost your client a thing. So if they're a little bit, again, if they're maybe have some health issues going on, more than you can deal with for short term, we look hard at these home health care plans. Okay, now let's just say their health isn't quite that bad. The next step up would be short-term care. Okay, and short-term care plans have come a long way. The problem we have with them, I think, is it's the labeling, it's the marketing. They came up with a different name than short-term care, because I think agents, and I'm guilty of this, I think of short-term care, I did for years, as something like it's a 3-month plan following a hospital stay. I always thought of it like a 90-day coverage, or I'm a long-term care guy. I'm going to sell a plan, it's going to last in a nursing home for more. What good's a 3-month or 6-month or a 1-year plan going to do them? How silly was I back then? But the reality is that's 90% of claims don't exceed 2-3 years. So covering people for a year or two, probably a pretty good idea. And that's what short-term care does. It's more comprehensive. It covers home care. It covers assisted living. It covers facilities. Of course, they're all going to be for 1-year benefits. You can have a 1-year home care claim from a stroke, for example, and then later be in the home for a year and then end up in a nursing home because of it. So it'll actually pay over a 2-year period. So, they're 1-year pots of money. Long-term care, of course, had to be 2 years or more. That's how that's filed. So short-term care can be as much as 2 years. So the name of it kind of throws people. And there are a lot of, 10 short years ago, there was almost 60 long-term care companies selling long-term care insurance, traditional long-term care. Now we're down to 3 that we can broker. 10 years ago, I don't think there was any, and maybe Aetna and maybe GTL, but 0 short-term care. Now we have 6, and I know of at least 2 or 3 more that are coming. So we're seeing a big shift here that people are going to start doing short-term care. And again, at GoldenCare here, we have all 6 plans that are available to you. Manhattan Life's, Wellaby, GTL, Aetna, Cigna's, and then Bankers Fidelity. I won't go into all the difference about which one's better and worse. We have webinars on our website, goldencareagent.com, where we break down the 6 of these, and there's kind of an explanation of which one's strong and which situation. And overall, I think Aetna's and Manhattan Life's are probably the 2 strongest, but there's different things for different needs in different areas, health concerns. So it's nice to have them all available. If you have something that might be a short-term care client, I'd suggest giving us a call here. We'll walk you through the benefits of different ones. So if their health's a little better, we can maybe look at the short-term care plans. And just another thing on short-term care, I mentioned this earlier. As an agent, it took me a while to come around to this. There's so many benefits to a short-term care as opposed to a long-term, mainly because of the 90-day certification. I'm just going to take a second because it's such an important thing. For a long-term care plan to work, and I'll come back to this. I think I have a slide that's going to readdress this again. We talk about having our cake and eating it too. So if I look at all these clients I wrote, 700 people back, in the late 90s, early 2000s, they have what's called a 90-day certification. So when you go on claim and you own a long-term care plan, so how do you trigger long-term or short-term care? They're both the same. You have to be able to not perform 2 out of 6 activities of daily living. That's the bathing, eating, dressing, transferring, getting out of bed, putting a shirt on, toileting. So as soon as you can't do 2 out of 6 of those things, you're qualified for benefits. For long-term care, that 2 out of 6 EDL deficiency has to be for a period of 90 days or longer for it to work. and it's not by the insurance company. Your doctor can say that, yeah, Mrs. Smith had a stroke. Looks like she's clearly going to be ADL deficient. She's going to need help with bathing, eating, dressing, and it's going to be months here. It's going to be, so they sign off on this being a 90-day or longer situation, then it triggers benefit. So the problem you have with long-term care, and I have too many of them out there, I wish a lot of them were short-term care, or I had a combo between the two, because I can't tell you how often I get a call from an adult child saying, hey, you sold my mom this long-term care. She had a bypass surgery. She had a valve replacement. She's laid up. There was some complications. She ended up in a rehab center. She was there for 3 weeks. Cost us like $10,000. Didn't we have long-term care or facility care of some kind? All these things you're looking at, knee replacements, osteoporosis, cardiac arrest, these things aren't covered by long-term care. Short-term care, they are. There is no 90-day requirement. As soon as you're 2 out of 6, you slip and break a hip, go to the hospital. As soon as you get admitted, you're gonna need help the following week, the next day. Short-term care will cover that. It also has the ability to extend out to 1 or 2 years. So again, it's that cake and eat it too. Of course, any cognitive impairment is a second way to trigger it. So 2 out of 6 ADL deficiency, and you can't bathe, dress, and transfer yourself, or you're cognitively impaired. So it's kind of a big thing to have your cake and eat it too, because I'm going to talk a little bit about that. There's so much of this post-hospital recovery care that's killing people. I mentioned the bankruptcy thing with medical insurance, medical problems. Okay, so kind of keep an idea that short-term care handles the short stuff, but then it also has the ability to cover up to 2 years on a given claim. So you can buy up to $252,000 worth of coverage. And if you put inflation there, you can get $504,000. So that's nothing to sneeze at. We have this slide that I had Lynn create for me, and I love this slide. And I'm guilty of this. So I always put the short-term care kind of thing in this same category as home health care only, dental, vision, and health, or dental, vision, and hearing plans. These small little things that really kind of a waste of my time. But really, the benefits have grown so much in these short-term care plans, and they're getting better. They cover the short and they cover the long. They really should be in the conversation with your hybrids and your traditional long-term care. So I do believe they deserve a seat at the big boys table. Anyways, that's just another option you have, short-term care. So again, super unhealthy, we've got home care contracts. Maybe you've got some pretty significant health issues, maybe home care only. Their health issues aren't that bad, kind of minor, short-term care. They're pretty healthy. Well, then we're probably going to be looking at long-term care. Okay. And again, there are 3 companies left that are really brokering this: Mutual Omaha, NGL, and Thrivent. All 3 of them are good products. They've got their highlights. They've got their strengths in some areas. This is, again, if you bring us a case, it's a traditional long-term care. Maybe you got a married couple in their 50s that are healthy. They own a business. They got plenty of money. They have no problem with a little more expense. They want to buy a more robust coverage. So long-term care is not going anywhere. It's still part of what we do. And we have, the 3 carriers that are out there, and they all have their strengths and weaknesses. Sure, it's a little tougher to get it, but we'll guide you. We'll let you know if the person has a health issue that we think isn't going to work, we're going to help you with that. We'll guide you on that. So we have 3 great options, and those aren't going anywhere. Traditional long-term care is still here. Okay. After that, you've got your linked benefits I talked about. Now, these are we call them hybrids, right? So they're pretty basic concept. You buy like a life insurance policy that's going to pay you $200,000 when you die. Okay. Well, what if you end up in a nursing home before you die? Well, these kind of plans will let you spend some of that death benefit in the form of a monthly benefit, maybe $3,000, $4,000, $5,000 a month. It's kind of predetermined. So then we can use some of that death benefit, and then the remainder, of course, we use for death benefit. So if you need care beforehand. And this is for folks that maybe, they didn't like the idea of just paying long-term care insurance premiums, and if they die in their sleep and never needed it, they kind of lost it all. And so the thought is, use it or lose it. Well, with this hybrid, if I don't ever need care, at least I get my $200,000 death benefit to give my kids, my family. So these have become a very popular thing. 10 years ago, there was 5 long-term care insurance policies, traditional plans, written for every hybrid. Now it's the other way around. There's 5 hybrids being written for every 1 traditional. So this market has shifted as well. A lot of people are doing the hybrids. I have an entire webinar on that concept and why sometimes you can do better by separating. I'm just doing a traditional long-term care or short-term care and adding a standalone life. But okay, so here are some of the products they have in that hybrid area. Those hybrids can be either done as a annuity or a life insurance. And so sometimes people have money, maybe they've got an annuity they've had for 20 years. There's $100,000 sitting in there. It's dead. There's no surrender fees. It's basically dead money. They're not earning interest on it really. And so like with a hybrid annuity, they can just move that $100,000 into a NuaCare by One America. And that way, if they end up needing care, they'll get $100,000 of care, but then the company will double or triple that 100,000 in case they need care. So the first 100,000 they spend, their money, but then the insurance company will double that or match that 1 to 2 times, up to $300,000 risk. So then their money basically spends 3 times as far. So if they're not going to do anything else, and they've got 100,000 sitting there, and they're against long-term care, that's when we start talking about using some of these linked benefits, asset-based ones, or life insurance policies that are kind of expired. They just do a 1035 exchange, or so there's a lot of those type of products and a lot of planning, and that's another thing we'd like to help you with. So there really are a lot of different options for you out there. Again, if they're super sick, we're just going to go with a prepaid life contract. We've also got some contracts that will help folks that are in nursing home as far as slowing the assets being spent down. There's a lot of things out there, but knowing what products and when to use them is very key. So just to kind of review again, if they're really sick, probably a service contract, some kind of home care only. If they've got somewhat pretty substantial or not, health issues, probably a home care only. If they're somewhat healthy but have a couple small things, probably short-term care. If they're super healthy and they can get a long-term care, we'll look at that. Or maybe again, they've got money sitting around, or they're worried about use it or lose it. They just don't like the idea of spending premiums. They want to get something back. So there's just all these things around to think about. And how are we going to help you? First of all, I'd really encourage you to call GoldenCare if you have a client, if you have someone. We'll walk you through when to use these things and when not. Essentially, another thing that we just put together, we have a 12-page extended care planning guide. Lots of stuff packed in here that can help your client kind of trigger those needs. To give you an example, like I just put this in purple on this observation versus inpatient. When I'm talking to folks about, things like a short-term care, I mentioned that 90-day certification and having your cake and eating it too. Today, and this is just one of the pages in this short-term care extended care guide, planning guide. So when you go to a hospital now, they'll either mark you as observation or inpatient, right? It's very common. They don't want to, they mark you as observation. Even if you spend the night, sometimes they'll let you go later and you're billed. Well, that changes on what part of Medicare you're billed under, Part A or Part B. So if you get billed under Part A, you're not getting the recovery care. So when you leave the hospital and go to rehab center, if you were billed under observation, you're not getting that first 20 days that Medicare normally pays for. And those facilities are $400 or $500 per day. So, that's where that short-term care plan or having something in place there can really save them a lot of money. But so what this extended care planning guide will do for you as an agent and your clients is really introduce you to a lot of the needs and reasons why you look at this stuff beyond just if I end up in a nursing home forever. There's so much more to the story here. There's so much stuff that follows hospital stays or surgeries, so this thing kind of walks you through the need for extended care and why it's so important. Great little guide. Okay, let me wrap up with this saying, okay, we have 6 marketers here that are here to help you. Feel free to call the office here, 800-842-7799. Just ask for any of the marketers. We'll help you put together whatever you're working on, whatever, I don't know, if they're not very healthy, if they're older, whatever state they're in, whatever ails them, just let us help you. I did want to tell you that I mentioned this tool earlier. When to use these plans, when they fit. For example, they have Parkinson's, they have, what plans will work, what plans won't. This Instant Pivot's a great little tool. I think Manny is going to be doing this. Let's see, 5/14. What is that? Next Wednesday, we're doing a little half hour just of this tool itself to show you how to what a neat way to kind of quickly understand which plans will work and which plans won't. Remember, I always want you to know to call GoldenCare if you get stuck. But that's happening next week. So with that, I think I just want to thank you guys for coming on board. Lots of different plans, lots of different options. Keep in mind also that a lot of the topics in here that we went through, the different products, if you wanted more information on an individual product, we have a lot of product training at goldencareagent.com, a lot of pre-recorded stuff, whether it be on just short-term care or just home care plans or traditional long-term care or hybrids. So selling techniques, consumer presentations, you name it, there's so much available at goldencareagent.com. All kinds of tools and resources to help you succeed. But the biggest thing is I want to make sure that you know to call us. If you're working on anything and you want some help, If you maybe want to get added some of these, maybe you're sitting there on the fence and you haven't added any type of extended care plans. All you've got is one long-term care and maybe a med. If you want to get some of these in your portfolio, give us a call. It kind of starts with you, the agent. And then again, I'd encourage you, don't be afraid to ask your clients about this extended care. What's your plan? Where are you going to be? Where are you planning on going in the event that you have a stroke? Are your kids moving in with you, or are you moving in with your children? Do your children live nearby? I promise you, your clients are waiting to hear these kind of questions because they're concerned about it. 90% of them are waiting, and GoldenCare is here to help you. So with that, I'm gonna let you guys go. So folks, I wanna thank you guys for coming on board, sharing some time with us today. Please let us know how we can help. Again, 800-842-7799, goldencareagent.com. Look for a pre-recorded, but good luck selling out there, everyone, and thanks for coming on board.
GoldenCare is looking forward to serving you with new tools, new products, new innovations, and always the best support in the business to help you succeed in 2022. So give us a call at 800-842-7799 or check out our website at www.goldencareagent.com.